Hello again, my name is John Newfer. Thank you so much for watching. Today we're going to be discussing the types of collateral we prefer lending on. So let's get started. So what collateral does Velocity lend on? Number one is 1 to 4 investment properties. We also lend on multifamily and mixed use properties, as well as commercial properties. Now, next slides, we're going to dive into each one of these categories and what it truly means in Velocity's terms. So first off, 1 to 4 investment properties. So essentially what that means to us here at Velocity is any single family property, any condo, so that could be a condo and a high rise, and then we also do duplexes, triplex, and fourplex. So that's our definition of single family 1 to 4 investment properties. Now, we do lend a 24-month interest-only loan with this type of collateral, so that basically means a bridge loan. And we will consider doing after repair value on this type of property as well. So if you have a fix and flip you're trying to do, it would have to be a single family, an investment 1 to 4 here. We also provide a 30-year fixed rate loan with a 3-year ARM option. So if you have an investment 1 to 4 you want to run by us, just remember these are the two options I have for you. I could give you a 24-month interest only or a 30-year fixed with a 3-year ARM option. Now, you can also blanket these loans. So let's just say your investor has a portfolio of, let's say, 30 properties. We will be willing to blanket those properties into one individual loan, so long as all the properties are located in one state. The next category is multifamily and mixed use. So what we consider as multifamily is anything that is 5+ units. And we will go up to an unlimited number of units. So if your borrower has, let's say, an apartment complex with 300 units, Velocity has no problem lending on that type of collateral. We also consider mixed use properties. So our definition of mixed use is anything that is retail as well as residential. It could also be warehouse, obviously, so anything that's commercial as well as residential. And it has to be actively used as mixed use. So I can't, help you with the purchase of a property that is zoned for mixed use, but it's not actively being used as mixed use. We want to see that there's active use, residential use as well as commercial use, or if we do appraise the property and it is a mixed use zonage, but it's vacant, we want to see that there is a clear residential use to the property as well as a clear commercial use, like let's say retail downstairs and residential upstairs, something like that. Now, the type of loan we provide with this category is a 30-year fixed rate loan. We do not have a bridge option for this collateral. However, if the borrower wants to go with like a 3-year ARM, we can give that to him too. And then once again, you can blanket the multifamily mixed-use properties. So let's say you have a multifamily on one side of the state and a multifamily on the other side of the state. We can blanket those together into one individual loan. Now, finally, moving on to commercial property. What we consider as commercial property and what we choose to lend on, that includes retail. We lend on strip malls, warehouse, office space. We will lend on business condos, self-storage, auto repair, light manufacturing, and the list actually does go on. And the key here is we want to see that whatever building is being used as a collateral, it's going to have a multifaceted use. And the reason being, Velocity is a no-income verification lender. So because we're not verifying the borrower's income, assets, or tax returns, we want to make sure that the asset is going to be rentable and leasable to multiple tenants, just in case one tenant may leave or any kind of happenstance. Now, when it comes to commercial properties, what we do not include would be anything that's institutional. We also do not lend on raw land or special use properties. So special use would be something like a hotel or motel. It's kind of like hospitality, as well as standalone restaurants. And once again, I just want to reiterate, the reason why we don't lend on these types of properties is because they're difficult to stabilize once a tenant leaves. So I don't know if you've ever seen a standalone restaurant like a Denny's go out of business, but that collateral will actually sit vacant for years. I've seen Denny's and other types of properties sit vacant for years. So it's all about preventing long-term vacancy with our collateral that we're choosing. Now, the only option you can lend, the option that we have is a 30-year fixed available for this loan product. So if you have a collateral that's commercial property, it's got to be a 30-year fixed loan with a 3-year ARM option available. We don't do any bridge loans with this collateral. So hopefully this helped you. Let me know if you have any questions. You have my information right here. I'm looking forward to doing a lot of business with you. Thank you so much for watching. Again, John Neufer with Velocity Mortgage. Talk to you soon.